In this video, we'll talk about market capitalization, commonly referred to as market cap by financial professionals. This is also interpreted as the market value of equity, the value that the market, in its collective wisdom, has assigned to a publicly traded company. And this holds true because it is the market through its trading that will determine the company's stock price and ultimately its value. Because in order to arrive to the market value of equity, all we need to do is multiply the stock price per share by the number of shares that are issued and outstanding. As an example, let's say we have two companies that are trading in US public markets, such as the New York Stock Exchange or the Nasdaq. These two companies are Company Alpha and Company Beta. Company Alpha has 2 million shares issued and outstanding, and its stock is trading at $50. Therefore, in order to arrive to Alpha's market cap, all we need to do is multiply these two numbers together. We simply apply the formula on top. So Alpha's market cap is $100 million. Similarly, to arrive to Beta's market cap, we need to multiply 30 million shares that are issued and outstanding by the $20 price per share, for a total of $600 million. Notice that Alpha has a higher stock price, $50, as opposed to Beta's $20, but a lower market cap, $100 million, as opposed to Beta's $600 million. And I chose the numbers to work out that way because I wanted to make it clear that a company that has a higher stock price doesn't necessarily have a higher value as well, because total value is also a function of the number of shares that are issued and outstanding. After this clarification, let's move on. In the previous video, we referred to large cap, medium cap, also known as mid cap, and small cap company stocks. In other words, finance professionals use market cap to determine a company's size and classify it into one of these three categories. Now the natural question is, what market cap values would fall into each category? The reality is that there's no market consensus as regards that. For example, one way the financial industry does this is by saying that those with a market cap of $10 billion or above are large cap ones. Those with a market cap that is less than $10 billion and greater than or equal to $2 billion are mid-cap stocks. And finally, those with a market cap that is less than $2 billion are small-cap stocks. And let me reiterate that this is but one way to classify companies. Different analysts might do so by using different values. Let's now go through some considerations of classifying companies into different categories based on their market cap. One thing to bear in mind is that the values above might hold true for the United States, but not necessarily for other countries. For example, what constitutes small cap in the United States might be a large cap company in a country where financial markets are not as developed as in the US. Another consideration is that if you express what constitutes large, medium, and small cap in monetary terms, as we did over here, that we expressed it in nominal dollars, you need to make certain adjustments to the values over time to account for a number of factors, one of those being inflation. For example, a company with a market cap of $1 billion in the 1930s would definitely be a large cap one, but now such a market cap would fall in the small cap category, at least under the classifications we express here. A way around this is to define the categories not in monetary terms, but to rank the companies based on their market cap from largest to smallest. After you rank them, and let's say that you have 100 publicly traded companies, so after you rank them, you can, for example, say that the first 25 are large cap ones. And remember, in this example you ranked from largest to smallest. So continuing from where we left off, the first 25 are large cap ones. The 50 that follow from number 26 to number 75 are mid-cap ones, and the remaining 25 from number 76 to number 100 are small-cap ones. And bear in mind that right now, I'm just trying to give you an idea of how you can use this ranking process to define large, medium, and small cap. It doesn't necessarily mean that financial analysts would do it in this specific manner I described. I'll close this video by saying that sometimes the term mega cap is used for extremely large companies, as well as the terms micro cap for extremely small and nano cap for even smaller. And of course, when I say extremely large and extremely small, I'm referring to size in relative terms.